So I want to thank everyone for joining us this morning. My name is Jared Prussin, and I'm the founder and CEO of SBA Loan Group. SBA Loan Group, we are one of the largest packagers of SBA loans in the United States, and we're very excited about our new partnership with the Florida Restaurant and Lodging Association. The purpose of today's webinar is we're going to walk you through how to get an SBA loan and what is an SBA loan. And items that we're going to cover are: what is the SBA? What is an SBA loan? How does it work? How can you use an SBA loan? What's the advantage of an SBA loan versus a regular straight commercial bank loan? How can an SBA loan help you and your company? How does a packager help? That's who we are. And some different client examples of deals. You will see that our phone number is on the bottom left side of the screen on every slide. So if anyone would like to have a call to discuss their individual company, either after this call or anytime this week, that number is the dedicated phone number for all Florida Restaurant and Lodging Association members. So what is the SBA? The SBA is the Small Business Administration. It was created in 1953, and in 1963 they started what's called the SBA Loan Guarantee program. And the purpose of the Small Business Administration is to promote entrepreneurship and financing to American companies. And the SBA, the Small Business Administration, is actually one of only 2 government agencies that makes money. So they make money by providing these loans to small businesses, and it's about a $36 billion a year program. Traditionally, before 2012, SBA loans were very complex and took a very long time to get a loan. But in 2012, after the financial collapse, the SBA has made it easier to borrow, and they've actually increased how much you could borrow. So for working capital, you can borrow up to $5 million, and to buy real estate for your business, you can borrow up to $14 million. And we'll get into more details of both programs as we go along. What is an SBA loan? So the Small Business Administration provides a 75% guarantee on behalf of the loan to the lending bank. So what that means is, if a borrower goes to a commercial bank, the bank has 100% exposure on that loan. If the borrower gets an SBA loan, the bank only has 25% risk on that loan, because the federal government is providing a 75% guarantee in case of a default. So in theory, the banks are a lot more user-friendly and will lend more under the SBA program because they have the backstop of the federal government. And the categorization of a small business is any business that makes $5 million per year in after-tax profits, which that equates to over 90% of the companies in this country would qualify under the SBA program. The loans are made by a commercial bank, and the banks, if they're issuing an SBA loan, must follow protocols set by the federal government. And if they follow these guidelines, the federal government provides a 75 and sometimes an 85% guarantee to the bank on behalf of the loan. The SBA has made it much easier to borrow money. Again, they've increased how much you could borrow. They've made it easier to qualify, and banks feel more protected under these loans because of the guarantee that the federal government is offering. So what is an SBA loan? So we sort of break these up into 3 categories. You have micro loans, which are loans between $100,000 to $150,000. Interest rate on these loans is about 7%, and the term is for 10 years. To do simple math, for every $100,000 you borrow under a 10-year term, your monthly payment, which includes principal and interest, is about $1,160 a month. That's principal and interest, and it's termed out over 10 years. The general loans are anywhere between $150 to $5 million. These loans are based on historical earnings, And again, these are 10-year term loans. The rule of thumb is we do what's called a global cash flow. We take your income, we subtract your taxes, we subtract your living expenses, and the money left over is cash flow available for debt service. For every $17,000 you show in free cash flow covers the debt service of $100,000. So in theory, if you have $170,000 a year in free cash flow, we could most likely give you up to $1 million 10-year loan. Now let's discuss the real estate loans. The real estate loans, you could borrow up to $14 million. You only have to put 10% down. The interest rates are about 6.5%, and there's 25-year term loans. What makes the real estate loans so attractive is commercial lenders want about 20 to 30% down. The SBA only requires 10%. However, if we give a borrower working capital at the same time we give them money to buy a building, we're allowed to give them an additional 50% and term that out over 25 years. So let me give you an actual example. Let's say a building cost $1 million. So if the building cost $1 million, I'm able to give you 90% financing under the SBA program, which means I can give you $900,000. But let's say you also want working capital to grow your business. So I could give you up to an additional $900,000 in working capital. I could throw that into your mortgage payment, and I could term it out over 25 years, which no commercial bank will ever give you working capital over 25 years. And the advantage of this is the following. If I gave you $900,000 to buy the building and I gave you $900,000 in working capital, in theory, you're going to walk away with $800,000 when you buy the building for your business. This is a very popular program for our clients, especially with restaurants and hotels who are buying real estate for their business. So we'll go through more examples of this, but this is a very popular program because of the extreme benefit of being able to borrow working capital, term it out over 25 years, and make it part of your mortgage payment. So how does it work? You can borrow up to $5 million for general business purposes. As I mentioned, you could borrow up to $14 million to buy real estate for your business. So if you're buying a building for your business, again, SBA has made it much easier to borrow money. So how does this work? The annual interest rates are between 5 to 7%. The term of the loans are between 10 to 25 years. There's no annual cleanups, which means this is very important because a lot of banks require this. This means that you never have to pay back the money full amount during the year. All you have to do is make your monthly minimum payment, and that's all you're required to do. The other thing is that banks only require under the SBA a copy of your annual tax returns. So you don't need to do monthly reporting. You don't have to get monthly requests to do drawdown. That doesn't exist. When the loan closes, you will get the full amount. And after, the only reporting requirement you have as the borrower is to provide the bank once a year your tax returns when you file. The next thing to know, which is very important, is these loans can never be canceled. So what does that mean? Let's say John Doe Restaurant borrows $500,000. Even if they lose money for the next 9 years, the bank can never cancel that loan. However, let's say John Doe Restaurant has a great year and they want to pay the loan off, there is zero prepayment penalty, which means you can pay the loan off at any time and you don't get penalized, unlike other financial institutions charge. There's two requirements to qualify for an SBA loan. One, there needs to be the ability to repay the loan. So we look at your last 3 years taxable income, and it takes us less than 5 minutes to qualify a company for an SBA loan. So in essence, for every 18 to 20,000 of taxable income equals you qualify for a $100,000 10-year loan. And the second requirement is you have to have good character, and that means a reasonable credit score and history and ability to sign a personal guarantee. So reasonable credit score is we want to see anything over 650, and if you have something, a credit score less than 650, but have a explanation, i.e. there was medical, there might have been a divorce or other circumstances, a lot of times we can overcome credit issues if there are reasons why there's low credit scores. So how can you use an SBA loan? You can pay off existing debt, so it might be expensive. So a lot of clients out there are borrowing money from these different types of marketplace lenders. They might be paying 18 to 20% or more a year. We can refinance that loan at 7% and save people a lot of money. We do a lot of that as well. You can use this money for advertising and marketing expenses. So if you want to promote your business, create more traffic, again, that's totally acceptable. If you want to hire more staff for your business, once again, completely acceptable. If you want to go buy another business, so you want to go buy another restaurant, you want to expand, you want to go buy another hotel, this is absolutely available to you for acquisitions. Again, you could purchase real estate, and you could purchase, equipment. We know in the restaurant and lodging business, equipment is very expensive. This is an inexpensive way to finance the purchase of expensive equipment. And a lot of borrowers don't realize, a lot of borrowers today use different types of financing and leasing companies. When you look at the fine print of a lot of the leases or finance terms on the expensive equipment, a lot of borrowers are paying 12 to 14%. This is only 7%, so you could save a fortune by utilizing SBA money for the expensive equipment you need to purchase for your business. So an SBA loan versus a straight bank loan. What's the difference between a commercial loan and SBA? So the 75% guarantee entices the bank to do the loan that they might not otherwise do. So meaning a lot of clients that we give money to under our SBA program, a traditional commercial bank would not do that loan because they just don't want that risk on their balance sheet. Well, now with the banks that we work with, when they're getting a 75% guarantee from the federal government, they feel a lot more comfortable in doing the loans and therefore are willing to lend to companies that they normally might not otherwise under the non-SBA program. SBA loans can only be canceled for non-payment. Traditional bank loans could be canceled at any time without any notice. Very minimal reporting requirements. Again, all you need to provide is once a year tax returns. Unlike a lot of these traditional bank loans and bank lines of credits, there's a lot of requirements on monthly reporting, monthly drawdowns, certain debt to equity ratios, certain AR requirements. They become very cumbersome and not user-friendly. Real estate loans, which is the one of the biggest programs we offer, you only need to put 10% down, and we can add working capital to the real estate purchase. So in theory, we can buy a building with no upfront money from you, the borrower, which is very attractive to a lot of our clients. Traditional real estate loans, they want 20 to 30% down, and they will not provide working capital as part of your mortgage payment. Under the SBA, we're able to do so. So we wanted to show a little graph of the difference between an SBA loan versus a straight bank loan. So types of lenders, you got SBA commercial, annual interest rates for an SBA loan are 5 to 7%. Commercial banks could be anywhere from 5 to 10% or more. Terms of loans, 10 years for working capital, 25 years for real estate. Most commercial banks don't want to go more than 1 to 5 years. Reporting requirements, all you have to do is provide annual tax returns. Most commercial banks, they want numerous monthly, quarterly, and annual statements and all kinds of reporting. Covenants, there are no covenants in an SBA loan. Commercial banks usually have many covenants. Annual cleanups do not exist. For commercial banks, most banks require it. The ability to call a loan, the SBA can never cancel a loan. Commercial banks can do it. Most terms in the commercial banks can do it at any time. Prepayment penalty, there's none in SBA loans. For most commercial banks, there's usually many. How will an SBA loan help your business? Well, You can buy the building you are in or open a second location. You can acquire an existing business. You can use the working capital to grow your business, to market your business, buy equipment, machinery, and many more. There's, again, very little restrictions on an SBA loan. So why not go to the bank yourself? This is an important slide. The SBA rule book is about 396 pages, and you need to know all the rules so that when you submit your application, it doesn't get denied by the bank. So it takes a lot of time away from running your business. Our expertise is structuring these loans for businesses. We do all the heavy lifting for you, and we stay with the client from start to finish, and we only make money on success. We're paid if we're successful for you. Many banks are not really interested in SBA loans, so therefore if you submit an application incorrectly, they mostly deny the loan. Their SBA showed a statistic, and the statistic showed that for the average company that submits an SBA request to a bank, only 3% of those loans close. Under our business, north of 87% of our loans close because we only sign up a customer if we feel it's a doable deal. And the second piece of that is we're experts on all the rules of the SBA. So over 87% of our loans close, and that's the statistics, by the SBA. If after weeks or months the loan does not work, you have to start all over with another bank. With us, we work with over 50 banks around the country, so if one bank denies your deal, we've got another 49 that we can go to, and we've already got the full package ready to go, and it's very simple to submit it to another one of our lenders. How can a SBA Loan Group help you? We are not a bank. We represent you, the client. We currently work with over 50 banks around the country. We know all the rules and regulations of the SBA 396-page rulebook. We collect all the data from you, and once we fill out the application, we then provide all the pre-underwriting for the banks. So it takes 5 minutes to pre-qualify someone, and then we will then send you the agreements to sign. We will then collect all the data from you. We will fill out all the SBA lender forms for you. We will email those back to you. You'll confirm they're correct, and then you'll go into our pre-underwriting. We do all the debt coverage ratios, all the analysis and the projections. We then submit the deal to one of our 50 banks, and again, we stay with you until the loan closes. We provide a lot of volume to our banks, millions of dollars a month. So therefore, we're able to negotiate very good terms and rates for our clients because the banks want to continue to get our business, and we can then provide very favorable terms and transfer that on to our clients. And again, we are only paid on success. We charge a small retainer fee, but if the loan never closes for whatever reason, you don't like the terms of the deal, we didn't know about a bankruptcy, you don't like the color of the paper, whatever reason, we will refund 100% of your application fee. It's our commitment with our partnership with the Florida Restaurant Lodging Association, and again, we only make money on success. So here's a couple of case examples of deals that closed, and we find this very helpful to clients when they want to get a better idea about what they qualify for. So first situation is working capital loan. The annual revenue of the business was $150,000 to $300,000. The taxable income after expenses to the owner's income was $30,000. So we gave them a $150,000 loan. The loan closed in 4 weeks. The term was 10 years. It was non-cancelable. The annual interest rate was 7%. There's 0 prepayment penalty, and their monthly payment on this loan was $1,742 per month, and that includes principal and interest. If this was a commercial bank deal, the banks would probably turn it down because banks don't like to do these kinds of small deals. We do a lot under this size. The term, usually if they were going to do a deal, would be 3 to 5 years. The interest rates usually would be between 8 to 10%, and there would be significant covenants and reporting requirements. Another case example, there was a client looking for working capital. Annual revenues were $500,000 to $700,000. taxable income after owner's income and expenses was $100,000. We closed this $600,000 loan. It was done in 7 weeks. It was a 10-year term, non-cancelable, 7% annual interest, 0 prepayment penalty, and the monthly payment was $6,967. Commercial banks would probably do this loan, usually $100,000 to $300,000, 3 to 5 years, 8 to 10% annual interest rate, and significant covenants and reporting requirements. Here's the statistics that we have found with a lot of our borrowers. If borrowers qualify for $1 from a bank on a regular commercial loan, they usually qualify for 3 to 4 times that under our program because of the 75% guarantee. So in theory, our SBA banks are usually willing to lend 3 to 4 times or more the amount in a regular commercial loan because of the SBA guarantee. Here's another example. This was a real estate purchase for $2.3 million, annual revenue of $1 million to $3 million. Taxable income after expenses and owner's income was $300,000. We gave the client $3 million, which means they only had to put $230,000 down. They gave them an additional $700,000 in working capital. The loan closed in 9 weeks to 25-year term, 6.5% annual interest rate, and their monthly payment is $10,128. If this was a commercial deal, the banks would require 30% down on the purchase price, which would be $690,000. The banks would probably give an annual line of credit of $400,000. It'd be a 25-year term loan for the real estate, an annual cleanup on the line of credit. The interest would be comparable, but there would be a lot of covenants on this loan. So the biggest advantage here is the building purchase was 2.3. We made the loan $3 million, and the client walked away with $700,000 in working capital from the closing table at the closing of the building. So case example, again, purchase a second restaurant, your existing cash flow and cash flow from the new restaurant added together. Every $18,000 of projected combined pre-tax qualifies you for $100, i.e. $180,000 of combined and pre-tax qualifies you for $1 million 10-year loan. So we do a lot of acquisitions, and this is a very inexpensive way for borrowers to leverage the SBA to acquire more restaurants or lodges for their business. So to end this, a 5-minute call is all it takes to figure out how much you qualify for. This is our dedicated number to the Florida Restaurant and Lodging Association members, 786-686-5050, or you can email tj@sbaloangroup.com. And we'd love the opportunity to speak with you to see if we can help you with financing for your company. This is a great solution and long-term financing for your business. So we appreciate your time, and if you have any questions, you can type it on the right side of your screen. You could turn on the mic if you want to ask, or you can go ahead and call us directly. So I'll stay on here for a few more minutes if anyone has any individual questions about an SBA loan for their business. Okay, is the interest rate fixed? So that's a good question. Most of the time, the banks do not offer a fixed interest rate. These are prime plus. But to do simple math, if prime goes up by a quarter point, it only changes your loan on $100,000 by $20 to $30 a month. So yes, interest rates will rise, but it does not affect your monthly payment very much. It's very minimal. So it's about $20 to $30 if prime goes up by a quarter point, and the rate could change on a quarterly basis. But recognize these loans are administered by the SBA, the federal government. Their motivation is to get the money in the hands of good business owners, so that money is going to trickle throughout the economy. You're going to hire people, spend more money on advertising, buy real estate. The SBA realizes that if they make these loans too expensive, then they're not going to make it, it's going to be cost prohibitive to the borrower. Yes, there is a cap. The cap is 2.75 over prime. So the interest rate can never be more than 2.75 over prime. And right now, the cap is 7%. Good questions. Well, I want to thank everyone for their time, and feel free to call us if you'd like to speak with us directly, or email tj@sbaloangroup.com. And I want to thank everyone for their time, and we look forward to working with you in the future.